Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Friday, July 18th. Before we begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1,000 subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, we'll dive into OpenAI's plans to take on Amazon. Then, Uber's plans to expand to Robotaxis. And finally, we have an update on the deal between the Japanese company that owns 7-Eleven and a Canadian company that owns Circle K. OpenAI is testing a new feature that'll let you buy products directly through ChatGPT, and OpenAI is going to take a cut from those sales. Right now, ChatGPT just links you out to places like Amazon, but the plan is to bring the checkout experience inside the app. OpenAI is basically turning ChatGPT into your AI-powered shopping assistant. And honestly, this makes a ton of sense, because I bet millions of people are already using ChatGPT to research what to buy. OpenAI has already teamed up with Shopify to power the checkout tech, and this move could unlock revenues from users of the free version of ChatGPT. OpenAI makes most of their money through subscriptions, but this opens the door for affiliate fees and ads as well, because I bet brands would pay a lot of money for their products to be recommended by ChatGPT. OpenAI CEO Sam Altman says he's not a fan of ads, but OpenAI is trying to grow the revenue to justify their $300 billion valuation. And that's why I think we're inevitably going to see ads on the platform. We saw this happen with Google 20 years ago. So don't be surprised if ChatGPT is just littered with ads in a few years. Speaking of Google, OpenAI actually just signed a deal to use Google Cloud to help power ChatGPT. OpenAI had exclusively been using Azure because of Microsoft's early investment in OpenAI. But now they're expanding their cloud partners to bring on Google, Oracle, and CoreWeave. This whole thing is pretty interesting because OpenAI is now using Google servers to power a tool that is actively killing Google's search business model. Let's shift gears and talk about Uber, because they just made a big move to expand their Robotaxi fleet. Uber just signed a 6-year deal with Lucid Motors and the self-driving company Nuro to deploy 20,000 autonomous vehicles across their network. Now, as a part of this agreement, Uber will invest $300 million into Lucid, and Lucid will provide Uber with their Gravity SUV that will be outfitted with Nuro's autonomous driving tech. The goal here is to roll out the first car by 2026, and Uber has been locking in partnerships with autonomous vehicle companies across the world. They have more than a dozen partnerships, including Waymo here in the US, and just yesterday, Uber announced a deal with the Chinese EV maker Baidu to launch self-driving taxis across non-US markets. This is a win for Nuro as well, which is a company backed by Google and the SoftBank Vision Fund. Uber and Nuro actually partnered back in 2022 on food delivery robots, but then Nuro pivoted to focus on autonomous software. But the biggest winner out of this deal might be Lucid, because shares jumped as much as 62% at one point once this partnership was announced. The stock has given up some of those gains, but is still up more than 20%. Lucid is a pure-play EV company that was once hyped as a challenger to Tesla when they went public back in 2021. The stock quickly climbed to as high as $30 a share, but it currently trades under $5 a share. But now, with this deal with Uber, the company is getting a lifeline, and investors are hoping that this deal will reverse the company's fortunes. Did you know that there are twice as many 7-Eleven stores in Japan than there are here in the United States? Well, that's because 7-Eleven is actually owned by a Japanese company called 7&I Holdings, and this company was about to be acquired by a Canadian company for $46 billion until the deal fell apart yesterday. The company Couch-Tard, yeah, that's their actual name. They operate Circle K convenience stores. They're backing out of their takeover of the Japanese company because they say that 7-Eleven had a persistent lack of good faith engagement. It turns out that there was resistance in Japan of a North American company taking over an iconic Japanese company. 7&I's stock is down more than 5% after these reports. Many people might not consider 7-Eleven to be an iconic Japanese company, but at this point, there are over 21,000 7-Elevens in Japan and only 9,000 in the US. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of TSMC, the world's largest chip maker, are rising after the company raised its 2025 revenue outlook. TSMC now expects growth of over 30%, which is above the mid 20% target it previously provided. Their profits for the quarter came in at 61%, a record high that also beat the estimates. TSMC makes chips for big names like Nvidia and Apple, and they've been a huge beneficiary of the AI boom, and big tech companies are spending billions of dollars to build out their AI infrastructure. TSMC's high-performance computing division, which includes both AI and 5G applications, accounted for 60% of their total sales in the quarter. So based on TSMC's earnings, there seems to be no slowdown when it comes to the demand for AI chips. TSMC stock is up more than 3% today. On the flip side, shares of the high fructose corn syrup maker ADM are down this morning after Trump said he convinced Coca-Cola to use real sugar canes in their drinks instead of high fructose corn syrup. Now, Coke hasn't actually confirmed that they're going to be making the switch, but that didn't stop investors from panicking. ADM stock was down 6% yesterday after Trump posted his tweet, and it's down another 2% this morning. That's all for today's show. Keep navigating those waters and see you tomorrow.